voltamos ao segundo dia e ao segundo painel do dia no evento ESG, repensando o valor de tudo. Lembrando que o evento já é considerado o maior do tema no país. No total, serão mais de 30 dias com mais de 60 painéis e 150 speakers, mostrando que sim, consumidores e investidores estão atentos ao propósito e atitudes das empresas. Além disso, a grande demanda do mercado é de profissionais qualificados para dar continuidade a esse processo. Por isso, a Exame Academy e a Trevisan Escola de Negócios revolucionaram e lançaram o MBA executivo em ESG Impact. E como eu já venho anunciado aqui, vamos sortear uma bolsa de estudos de 50% para o MBA ESG Impact por semana. Se você quiser saber mais como você pode concorrer, é só apontar a câmera do seu celular para o QR Code que está aparecendo aqui na tela e se inscrever. Bom, levando em conta todos esses fatores que eu acabei de chamar a atenção logo acima, vamos falar um pouco sobre a demanda que tem vindo dos investimentos. Para falar sobre o tema investimentos sustentáveis, trouxemos os seguintes especialistas: Marisa Drill, da Credit Suisse, Patrícia Genelu, do BTG Pactual, e como moderador teremos Rodrigo Caetano, que é repórter de ESG da Exame. É com vocês, pessoal.
Olá a todos e a todas. Muito obrigado, Jéssica. Eu estou muito feliz por estar aqui nesse painel com lideranças tão importantes. Eu vou agora passar a falar em inglês, porque nós temos uma convidada internacional, que é a Marisa. Ok? Hi, Marisa. Hi, Patricia. Thanks for being here today with us.
Thanks, Rodrigo.
Well, I want to say that it's an honor to moderate this panel and a privilege to hear from such important leaders in the financial world. We have a lot of topics to discuss. Unfortunately, we only have 1 hour, so it would take days for me to ask all the questions I want, but I know you two are very busy, so let's keep it in 1 hour. And for start, I want to ask you, Marisa, how do you see the global investments scenario for the 2021 as we enter the decisive decade for the SDG, the Sustainable Development Goals? How do you see the scenario?
Well, I have to say I am extremely encouraged. I think we were all a little bit worried about what the effects of the pandemic were going to be, just in the markets in general. And then in particular, was this going to be a moment for there to be a pause in terms of the enthusiasm for sustainable investing as people were grappling with the recovery? When in fact, we've seen the complete opposite. So we have very, very buoyant financial markets across the piece. I think what we're seeing is the recovery in so many economies is exceeded everyone's expectations as we are beginning to open up many of our societies around the world as the vaccinations are rolling through. And then very, very happily for my field, we have seen an extraordinary, I would say, acceleration of the amount of capital that is flowing towards sustainable strategies. And the reason that I believe that is the case is that we had a global moment to pause in 2020. And I think many investors reflected on what are the lessons that we could learn from COVID? What are the takeaways? And a few of those, which I'm sure we'll get into in more detail, were things like the notion that we need private capital to be galvanized in a very, very organized and accelerated way to mitigate climate change and help prevent things like future pandemics. And so we have seen really, I'd say, a step function up in terms of the capital flows across all asset classes into these sustainable strategies. So again, looking forward to a much richer discussion of why that is the case, but it is absolutely a phenomenon that gives us all in the field much encouragement and enthusiasm.
Thank you, Marisa. Thank you. And Patricia, I'd like to ask the same question, but adding the local scenario to it. How is the financial world in Brazil navigating these changes that are happening?
Great, Rodrigo. So let's tropicalize the discussion, right? It's great what Marisa just mentioned, because we have to analyze what's going on in Brazil based on this global movement. So Marisa was mentioning how the capital is flowing globally. And when we look at more mature markets, such as the European and the American ones, we see that the sustainable investments are really gaining traction, and they are already a very relevant part of the allocation by the main institutional investors, private investors, and even individuals when we take that into account. So what has been happening in such mature markets definitely is coming now to what is going on in Brazil. So we had a conceptual discussion for years, but definitely the pandemic accelerated that traction that we are now gaining. So when we look at what Larry Fink was already announcing at early 2020 on this capital flow that would shift how the allocation is made towards ESG investing, and how climate change, as Marisa just mentioned, was going to be a crucial point of decision on that asset allocation, that has actually became a reality and is still on that ongoing trend. So when we take into account what is going on in Brazil, we see that we have huge challenges, both in environmental and in social terms. And Marisa just mentioned what the private capital could do in that sense on challenging that issues that we have, and actually bringing up solutions to face them. And in Brazil, in Latin America, that's especially true, because we are in very sensitive fiscal movements for all of our countries in the region, and private capital is becoming more and more important. And only we have that happening, and our challenges are getting deeper based on the pandemic sensibility that was brought up. But also we have this modification of standards that is going on, inspired on what is going on outside. So our investors are becoming more educated on the topic. Institutional investors are now taking into account, starting to take into account these ESG factors in their portfolio allocation. Private investors and individuals are willing to do something more on their capital, not only to deliver solid returns. And when we talk about Brazilian demand in that sense, solid returns should really be taken into account with the same importance. So, for example, BTG just created the Sustainable and Impact Investing division in early 2020, right at the beginning of that strength that began to actually be felt in our local market. And we are delivering these products that have solid returns alongside sustainability goals or impact drives, and that should be taken into account when we look at the foreseeable future. So this tendency is only going to get deeper. Our investors and our companies, they are all starting to do their homeworks on a more serious manner, and our financial institutions are starting to work, such as BTG, on developing such financial products that take that into account. So I just see the same tendency just that Marisa highlighted for the global perspective, now gaining traction at our own rhythm, at our own pace for the Brazilian market.
Great. Thank you, Patricia. And you too mentioned climate change and also other drivers for ESG investments. And Marisa, what is driving this ESG investment? What else is responsible for
Sure.
this trend?
So yeah, there are many factors at work here, and I say it's almost the perfect storm of support and foundation for this market. So on the one hand, we have a proliferation of regulatory intervention where political leaders are expressing in many ways their political ambitions through regulatory policy. So we see so much regulation coming in the form of green initiatives. It may be in an industry specific way. So as an example, many countries are putting in policies that will ban over time, say, petrol cars in favor of vehicle electrification. You know, in that instance, the minute that happens, what are you creating? You're creating the environment for a very, very positive return for those investors to invest behind those companies who are creating and building electric vehicles. We're starting to see, so those positive type incentives. We're also on the regulatory side seeing quite a bit of intervention in terms of what is an investor's fiduciary duty. So meaning if you are a pension fund trustee, as an example, it is now considered, in many cases, it's becoming law that that your fiduciary duty includes taking ESG into consideration in your investment decisions in your pension allocations. So it's these types of actions that are creating this very positive environment. At the same time, during 2020, we saw tremendous performance from sustainable funds, very much across the board and in different types of asset classes. We saw case after case of very strong performance indicators. And I think that's given enthusiasm to the markets to put more capital to work in this space. And then the final aspect I would say is just this very much a desire, I would say, on the part of the private capital community to be a part of creating solutions to some of these big systemic problems, whether they be climate change or some of the social issues which Patricia mentioned. I think there's this desire and now belief that that this concept of putting money behind social or environmental outcomes, you don't have to sacrifice returns. And in fact, it can lead you to extremely attractive investment thematics that also help you to create a diversified portfolio. So very sound investment thesis, but it's doing that in a place where you have a big addressable market, i.e. a big systemic problem, and it's very necessary. So if you can find the companies that are part of those solutions, almost by definition, you are investing in a place where value is going to be created. So all of these sorts of things, I think, are giving us this increasing momentum in the field of sustainability investing.
Mm-hmm. You mentioned the good returns from ESG funds and also companies in sectors like energy, clean energy, and others. But do you think this will keep going on, these good returns? Because also we saw sectors that are like oil uh, being hit hard by the pandemic in the beginning, and so this comparison may not be that fair. Do you see this good returns keep going on?
I mean, I can maybe begin to start there, maybe with a global perspective, and Patricia, please jump in with your thoughts on it. I think, as always, you don't want to necessarily overstate. So what we certainly aren't saying is that all sustainable investing will outperform, forever and ad infinitum. But what we did see during this crisis is this sort of phenomenon where we had very strong performance. And when you unpack this a little bit, you had general sustainability funds perform very, very well. And one who's cynical could say, well, perhaps that's because you didn't have exposure, as an example, to a lot of fossil fuels companies in a sustainable portfolio. And when oil prices took a hit, perhaps that was one of the reasons why these performed. But what we also found is if you were to look at investments and funds on a thematic basis or even across industries, we still saw outperformance of ESG leading companies versus the laggards. So the higher rated ESG companies by industry outperforming. And that by definition means if you were, say, looking at healthcare, you wouldn't have had oil and gas in that portfolio. So there is something there, and I think it's quite provocative to try to understand. And why do I think that is the case? I think in many respects, high ESG leading companies are just well-governed companies, well-managed companies. So they are very well prepared for a time of economic or fiscal shock to be able to react. But also, I think these companies are capturing the hearts and minds of their underlying customers and consumers. The companies that can tell well and articulate well their sustainability story are very much in the frame of where people want to participate in patronizing them. So there's a linkage here between those companies that are very, very aware of what their consumers want and need and these underlying trends and their ability to respond to them. So I think there's a lot here. Now, that having been said, there is one element of all this, I believe, which is the capital moving into these ESG leaders. So that by definition is driving up their valuations and prices. And that is likely not sustainable. At some point, that outperformance self-corrects. So then I think it is incumbent, it's just smart investing and general smart investing theory that you need to be careful about purchasing stocks and businesses that are overvalued or highly valued. So then what do you need to do? Perhaps ESG leads you to then finding those next companies that are on the ESG journey. So we say many times alpha gets created in those companies that are actually in process of becoming leaders, because they will then be the next ones to capture that attention. So there's a lot here. I think there's one other aspect of it I'd like to point out, and then Patricia, please do jump in with that local flavor. But one of the things that we're seeing is the companies that are the disruptors, I call them. So these are young, innovative companies that are solving some of these intractable problems. The potential for creation of value is extremely high there. So who is the next Tesla? Who is the next Beyond Meat? Who is the next Notco if we're talking about a Latin American company? What are those companies doing? They're solving environmental problems in many cases, and in some cases, those environmental problems are also social problems. So if you can find that next disruptor that's going to change the industry, that will be the next, as we say, rock star company in terms of its value creation. So I think that's another place where sustainable investing leads you.
And that's
Yeah,
the
wow.
$1 billion question. Oh, sorry,
Yeah.
Always.
Patricia, please.
No,
Please,
what
Patricia.
Marisa said just rings so many bells that I can't avoid to comment on that, because I see all the same things that she's mentioning. And it's interesting to analyze our local perspective, also taking into account the background that Brazil was during all this period of time throughout pandemic at our lower interest rates, the lowest levels in historical terms. And what has been happening already in the financial industry based on that scenario was this financial deepening. And what we see was this culture of our investors allocating into fixed income assets. And now we had to diversify the portfolios in order to keep our higher returns targets into the alternative universe. So with that context in mind, what we see was that based on these alternatives, we have this major tendency on who are the winners on that, right? So what Marisa says, that the companies that are adopting the best practices, the most sustainable ones, well, it also happens that these companies, they have higher governance level, higher professionalization level, and when we take into account their cost of equity or their cost of debt, yes, they are the best ESG performers, but as a coincidence, they might be the best, the more professional ones as well. So the premium, it's really hard to compare, but it is already there. And when we take into account something that Marisa also brought up, is that these upcoming companies who are facing our social or our environmental challenges, we do believe that these companies will be best positioned in the future market. So they are adding value to society, to the environment, and that value should be perceived in their future valuation. And more as these products and these services, these goods they are producing are valued based on the solutions they are creating. And that type of investment has been a drive for what we have been developing here in terms of financial products. And also, another thing that is really crucial, I guess, when you analyze ESG performance versus traditional assets, is the term, the window you are analyzing. So when we see a very volatile market, at least in the local or regional space, such as the one that we do have right now, for a short window of time, you may see traditional performing better than ESG. But when you take into account a short window of time, when you're into a crisis, when you had, for example, last year, we had the opposite also happening. The companies that are not necessarily ESG compliant, they actually perform worse than who is. So the window of your analysis is really important. In the short term, you have more volatility, you have more ups and downs on traditionals. And when you take into account the long term, that's where you actually are being able to see the best performance within companies that are adopting ESG as something more serious. And when we look, for example, at the demand for sustainable finance issuances for debts that have been taken out to the market, Marisa can for sure add on that on her international perspective. But in the offshore markets, we already have that discussion that you brought up on maybe we have this huge demand for ESG assets, and the offerings of those assets are not really there yet. So there might be a premium, what we call for this debt, a greenium, that is actually being priced, and that is starting to be a concern in the offshore market. But when we look at what is happening at local markets in Brazil, we are still in our education process. We are still integrating ESG into our portfolio allocation, starting to understand what impact investing actually is. So we are at a total different pace. We don't really see that huge bubble or that pricing difference happening with a huge strength in the local market. But of course, we have that tendency. We are developing both offerings and both the education on the demand. And the thing that Marisa also brought up on transition, I think is crucial when we talk about Brazil. So the companies they are seen as polluting as part of an intense carbon economy, they should be brought into the discussion, and they should work on sustainable solutions, and us as financial institutions should collaborate on that. Investors should actually enhance those practices and motivate these companies to engage into this transition. So we do see a very promising near term and medium term opportunity for that to happen. So not only on those solutions that are already green, that are bringing up social solutions, but also to companies that are transitioning. So that's going to be particularly special for our region as well.
I love this word, greenium. It's great, great term. And we have a question from the audience, and thank you for all of you that are watching us. Walter Blasio, he wants to know what are the obstacles for Brazil to receive ESG investments comparing to other countries? Marisa, your international perspective on that, please.
Mhm. Sure. Well, investors, as rightfully pointed out, in the first instance, we are talking about the world of returns. So I always say the most sustainable investment profiles are those that are generating at least a market rate of return for the given asset class. So the challenges for an ESG investor in some respects start with the same challenges that traditional financial investments have. So in developing markets, typically the investor will be worried about currency risk. If they're not investing in their home currency, they might be worried about political risk and some of those other very traditional risks. And those are hurdles and barriers to global capital flowing. And then the second piece is now as we move into the world of sustainability, I would point to two things. One would be a lack of investment opportunities. So since it is early days in Brazil, there's still, you're at the point now where there isn't a plethora of Brazilian or even Latin American specific sustainable investments that have presented themselves. So individual companies are doing great things, but fund structures which provide certain asset class diversification, there aren't many. And that will come, and that's definitely sort of the wave that we've seen everywhere else in the world. But if you're an investor today, you've got a limited choice. And then the final thing would just be the maturity curve of the understanding of those sustainable companies and how they present their story and their narrative. Because the ESG and sustainable investors and the international community is getting ever more sophisticated as they're looking to deploy capital. and they're being very, very precise with the metrics that they're using to think about sustainability. And this is a part of this maturation of the overall sustainability field. It is to have common disclosure metrics, as an example, with the same indices or same statistics being disclosed by companies in the same industry. Today, that's a bit of a challenge. So if you're an investor and you say, I want to analyze two different investment alternatives of two companies in the same industry, and I want to look at their ESG disclosures to be able to make an informed investment decision. Even in the West today, you don't have the same information being disclosed. And I would say it's even less so the case in developing markets and in a region like Brazil. But this will change, because what we're starting to see is a harmony and a standardization of what good looks like in terms of company disclosure by industry. And as that continues to evolve, you can see that the whole world will begin to look at that as a marker of good practice. And then it's going to make it a lot easier for the investment community to make decisions about where to put their capital.
Great. Patricia, how Brazil can overcome those obstacles?
Yeah, no, very, very complementary points of view. I guess it's awesome to listen to Marisa. And on the other side, when we are structuring here products and we are talking about attracting this international capital into such opportunities, one thing that I think is very important is communication. So, I mean, I as me as Brazilian, I see this huge potential for Brazil as a destiny, as a final destination of the resources that global investors are willing to allocate into impact and into sustainability. And at the same time, I believe that we don't quite communicate well what we're actually doing here, the commitment we have in the private sector, for example, which we understand to be the driver for this major change. We have a huge potential, and we should communicate it right as a country, as a nation, as private individuals and private companies. So we are still working on that communication aspect. And the major challenge, I believe, to be the macroeconomic environment right now. So I completely agree with what Marisa said on currency risk, on political environment. Well, we are Latin America. We are volatile, by nature, by essence, and that's what we have to deal with, and we understand it because we are locals. But the international perspective sees this major risk component, and sometimes you have that window closed. So international investors right now, for example, are not showing a great appetite for allocating in Latin, in Brazil specifically, and that's due to macroeconomic conditions. Even when we talk about impact opportunities, when we look at our social and environmental challenges, which are huge, sometimes the investor pocket that is looking into impact creation, they look at Africa, they look at Asia. So the driver of that allocation will be majorly affected by macro conditions moving forward, which we expect that stabilize and becomes more attractive in the medium term for international capital. And one other thing that I believe that could be challenging is actually the identification of opportunities. So when Marisa says there is this lack of funds, of structures, of financial products out there in the market, that's absolutely true. And that's why at BTG we created the Sustainable and Impact Investing Division, exactly to develop such opportunities, to bring to the market the opportunity to allocate into sustainability, into impact. So that's what we are trying to modify, but we will have our maturity curve. We will have our financial industry development on bringing up such products. And when we talk about companies that already, they get born, they are born already with the DNA for a green transformation or for an impact orientation, these companies, they are starting to come up in Brazil, but they are still at the early stages. We do have some opportunities that are related to growth, and that's where, you know, we are also trying to orient our focus on. But we do believe that this environment, this ecosystem in general, it will mature in the upcoming years as well. And one thing that we see is that we have this first products coming out. We do have this broad challenge to be faced, and sometimes these products, they face this broad overview of it, and the international investors, they already have a niche pocket. So some international investors, they want to allocate into reforestation, some others want to allocate into renewable energy. So there are specific pockets, and where we are right now in Brazil is to have this broad overview of, you know, several opportunities. So I believe that the offering that we have on financial products will grow, the opportunities that we have will mature, and we do have this great potential to be explored, this natural vocation that exists and that we should communicate better. So I'm really optimistic on the industry development, and we are doing that already in our pace, and I hope that accelerates even further.
Yeah. Yeah.
Gina, if I can just
Yes,
add one
Marisa.
thing, just to pick up, if I may, just on the positive side too, because I'm also very, very optimistic. And one of the things that I see in Brazil, this resilience of having been part of a very volatile economy, there's a resilience to the people, there's a really resilience to the way business models are created. And so it isn't always just copying something, you know, in the West of a business model and trying to apply it. There's actual real innovation happening. And I think if we look at areas like deforestation and the opportunity around regenerative agriculture, I'm seeing innovation happen in Brazil around how do we manage livestock in a smarter way? How do we manage forestation in a smarter way? And some of these innovations don't exist anywhere else in the world. And part of that, I think, is because the importance to the economy of some of these industries is so big relative to the overall size of the country that almost this innovation is born of necessity. Another area, you know, I've seen an amazing entrepreneur doing great work is in the field of affordable housing. A really, really progressive business model about a holistic look at solving a really big problem which exists everywhere in the world. Whether you're in a developed Western market or an emerging market, affordable housing is a really, really big issue and growing. And I've seen innovations around Brazil where it isn't a big issue. Somebody stepping back and taking a very, very unique look at creating a business model that is tied to the end consumer in Brazil and what that consumer needs and wants, and working backwards to create a profitable business model around that. And it's those sorts of, not just, I'd say, tech innovations, but business model innovations, which ultimately, I think if we can prove those success stories in terms of their ability to generate returns, but also, as Patricia said, the narrative, how do you tell that story? Investors will be very captivated by that because they're always looking for proof points on positive outcomes. And I am quite encouraged by some of the things that I'm seeing there, both on the environmental and social side.
Yeah, there's one issue that I think it's important in this all this context that you gave us is that about greenwashing. Yesterday, I was talking to an environmental lawyer here in Brazil, and she pointed out the necessity of creating a taxonomy to bring security to investments. For example, sustainable linked bonds, how investors can differentiate what is really changing behavior from companies and what is only market. So, how to deal with this?
Mm.
Uh,
I mean,
Marisa,
Well,
happy to start. We've spent quite a bit of time on this topic. So today in the green bond market, as an example, you have what's called the green bond framework. So it's a set of standards or principles, if you will, for what the definition of a green bond is and isn't. And the industry has also created a practice whereby there are third-party assurance providers that will look at a green bond and its use of proceeds in a very rigorous and consistent way and give essentially a seal of approval as an independent third party to any issuance. And those companies or those issuers which seek that third party opinion and follow those international standards then are able to be, their securities will be able to be part of the green bond index. So that's a marker of good practice. Not everybody follows that, and it's not necessity that you do that, but those companies that choose to follow that path, I think, are sending a signal about the rigor and how seriously they are taking this notion of making sure that they're leading with substance and not just marketing. But I think increasingly a taxonomy that is universally adopted is critical. Today, there is no one definition of green, but the European Union is hard at work and they're showing great leadership globally on trying to create what they call the green taxonomy. And my observation is that, and what I'm happy about, is that we're starting to see other regulators and other regions of the world saying, rather than reinvent the wheel and create my own taxonomy, and then everyone's confused because you have 5 taxonomies, everyone is, I'd say, moving toward deferring in a way or participating in this universal standard led by the EU. And I think that will only be a healthy thing for the market. But we've also talked about the concept of transition. And this is even trickier place because transition, when you're talking about green, typically you're measuring something very specific. It's one number like CO2 emissions. When you're talking about transition, in many cases, we have high carbon emitting industries that are on this path to become more sustainable. But each industry is at a different place in terms of the options that are available to get to green, or if we say get to Paris alignment. And so in some industries, it's very clear what that path is because we have the technology to get there or the real green solutions as alternatives. But there are other industries where today we actually don't have a Paris aligned pathway. Something like aviation fuel today, we don't have the green technological solution for that fuel that goes into our airplanes that would ultimately be, Paris aligned. And so transition is therefore a little bit fuzzier subject. So we have been hard at work at Credit Suisse to help work on what would hopefully be something very similar to the green bond framework, which we're calling the transition, or what is a credible transition framework, so that similarly issuers could look to that framework, follow those principles, and sort of give an assurance to the market that they're very serious when they're using this transition label. And anytime you have a framework and a commonly adopted set of standards and metrics, that's something that I think will give confidence to the market and also help to weed out greenwashing.
Yeah, I think that topic is really important. Just to contribute here, Rodrigo, one thing that I always say when we are structuring a new product, when we are advising a client on any issuance we have, is that 10 years ago, if you look at this market in Europe or something, a green issuance would be a green issuance. You'd have the demand for the green issuance. And we are now at a much more mature stage of all that environmental and social discussion of those sustainable development discussion. So the pandemic accelerated that at a real huge pace. And what we have today is actually a higher bar. So you can have, as a company, a downside or an upside if you come out to the market with a labeled issuance, because if you are in the right position, you have the right criteria, you are aligned with all the standards that Marisa just explained, you have your external opinion that is really valid into an international standard perspective, and you are doing something material to the company, to the environment, to the society, great news. I mean, you have an intangible value being added to your perception as a company. You will be communicating your sustainable strategy very well, and there could be even a tangible portion of that into pricing benefits because you're doing that, and that's awesome. But if you're fragile if you don't have the right storytelling, the right orientation, the right alignment in internal terms, in external terms of your stakeholders, if you have your sensitivities, because you are more driven to a marketing strategy instead of actually have a substantial transformation being conducted through a specific use of proceeds of an issuance, or through a specific goal that you're announcing that you're now committed to, then in that fragile sense, there could be a downside. There could be a downside that the public opinion will criticize what you're doing, that it will identify that's greenwashing, that investors won't think that's sufficient, that they will actually perceive your strategy as something that is empty, and that will bring you a poor perception on the company's sustainable strategy instead of leading you to the upside case you are actually targeting. So we are at that stage where the bar is higher and where the alignment should be true. So we should always rely on the international standards Marisa just mentioned. Many of them are still under development, so we should be very careful with innovations, because innovations, if they're not really aligned, there could be a downside instead of upside. We should always have the independent review, the second party opinion, not only a self-label strategy, but also to verify that against those international standards, and always apply metrics. There are, becoming the international language for how you actually measure that, for how you actually communicate the impact you are producing. And for us as an institution, as someone that is structuring, that is distributing such products, we should have that filter. We should bring that ability, that skill to our clients, to the services we are doing, and filter what is really aligned or not, and advise them on how it can become aligned and how they could conduct those sustainable practices into something that is really become ingrained into the culture of that company, into the intentions they will communicate. So I think that the public opinion, the investors, the companies, they are all in that journey, and the market is coming up to something that is much more mature right now.
Great.
And the other thing I would add as well is just this notion of sustainability linked, because the market originally evolved as what we would call a general use of proceeds market. So an issuer would raise money and they would say, I'm investing it in something green. But that was the extent of it. And then the third party assurance provider would check a year later to see that those proceeds were invested as they were described originally at the beginning. But now what is happening is, and the market, I think, is very, very enamored with this idea, is that there are a series of KPIs, very specific metrics and targets that issuers are saying, I'm going to raise this capital and I'm going to put it toward this cause, and I am going to achieve these different metric outcomes. And if I don't, I am willing to suffer a penalty or pay a premium in my cost of capital if I do not make it. So investors like this because they see that there's something very tangible the company's holding itself accountable toward, and they will put, as you say, skin in the game on that delivery and be willing to suffer a cost if they don't get there. Now then, of course, the devil is in the detail on what those metrics are. Are they rigorous enough? Are they really challenging and aspirational? Or would the company, just through the regular way business, hit those targets anyway? And I think that's where Patricia is being very, very clear in her messaging, which is, the companies have got to be very, very strong in what they're communicating and how they're approaching these issuances, because the investment community is getting much more sophisticated in weeding out those who have real serious intent and they're ambitious and they're credible, and those who are really putting a marketing label on and there isn't substance behind it. And the companies that do well will get very well rewarded in this green premium, or greenium as we call it, so a cheaper cost of capital. And I do think that those companies that are taking this not very seriously, the market is beginning to be very, very picky about those types of outcomes.
Great. The pandemic made clear that the level of inequalities between countries and within countries is unsustainable. How to solve this problem, Patricia?
Well, again, $1 million question, right? And a few minutes, but I think, Rodrigo, that private capital is a solution. Uh, we had our development across centuries that led us to a stage where society can now take into account several aspects that are going to be considered into our decisions are, as you know, capital allocators, as time allocators, as efforts allocations. And we are now at a stage where our public part of the economy is really at a sensitive phase. And when we take into account, for example, a Brazilian culture, for decades we had this culture being developed where the government was going to be the solver of all of our problems and the final solution for everything that we came up with as problematic, and actually delegating to the public sector the solutions of our private individual choices is something that I believe that is not the right strategy for us as a society and as a developing country specifically. So for us, private capital is going to be strategic in that moment. And that private capital is now incorporating sustainability as goal and impact drivers on the allocation. And these solutions, they're bringing out solutions that are scalable to social and environmental challenges. They are going to be the winners in the future. The companies, the projects, there are bringing up transition solutions and pathways, they are going to be the winners in the future. We are already discussing a pricing benefit right now. Imagine what's going to happen in 10 years when we have the 2030 agenda being revealed, and when we have the Paris Agreement alignment being revealed in 2050 or 2060. I mean, that's the future. Those are going to be the best positioned companies and solutions and projects. So I do believe that for us, having that private capital as key will be the driver for the solutions. For us to actually motivate the right components that are bringing up scalable solutions, that will be the driver. So that is why we are developing at BTG these financial products that have such components. And managing your business sustainably is a must. That's a must, and no way back. That's a must in Europe, in US. That's becoming the must in Brazil. And we are already incorporating that. But more than doing how we are doing things sustainably is what you're doing. What are the solutions you're bringing up? So the impact driver should be more and more important and should actually define the winning strategy for your capital allocation moving forward. And that's why I believe that in 2020 we created a sustainable and impact investing division. But I hope that at 2030 that division might no longer exist, because we're going to have that really as a way of doing things in general. And we will be targeting in everything that we'll do those same objectives on sustainable development. So I think that those are the keys for us to actually face the challenges that we have.
Yeah. Marisa, just to add to this question, what's the responsibility of the G7 countries also?
Well, certainly the G7 is recognizing the social component of all of this. You hear words like not just the green transition, they're talking about build back better and the just transition. So I think there's this recognition that you can't separate, as much as climate change is dominating the agenda because it is so urgent. In the same breath that people are talking about the E, they're talking about the S, recognizing that climate change will disproportionately affect, say, those at the lowest strata of society. And we saw the same thing in the pandemic. And you cannot let that continue because you will have chaos. And some of these social inequities that have surfaced through COVID are very, very much on the minds of political and civil society leaders. The good news with all of this is that the S is very much coming to the fore. We see this in the investment behavior of our clients. Our institutional investors are demanding S products and services, which is a relatively new phenomenon. If I look at something just like the debt capital markets, 2 years ago, we didn't have such a thing as a social bond. And yet last year, we had an issuance of social bonds just in the debt capital markets of over 100 billion coming from nowhere, which tells you the investment community is saying, I want to put more private capital behind these as topics. So I'm quite hopeful there. The other thing that is coming to the surface as well is, much as political leaders, the G7 recognize this, so does civil society. There's a study that was just done. I participated in an event just before this one, where there was a survey, a global survey, and it asked people what they expected of company CEOs. And one of the most important topics is both civil society and employees of companies are expecting chief executives of corporations to play a major part in bridging some of the S inequities. So there's an expectation of our corporations now, i.e. private companies, to be part of the solution and not just leave it to governments. And then the final point I would make is that in our own research at Credit Suisse, our research teams were trying to identify and isolate out of the E, S, and the G recently, what were the real drivers of value of those three components. And what they found was the biggest driver of value outperformance were companies with the highest S scores, the social scores. So whether that's correlation or causation, I don't know, and I don't want to overstate it, but I think it's quite interesting how important this S topic really is, both to the private community, but I would say civil society at large.
Yeah, very interesting. And Marisa, you said a few years ago that ESG is not only about the money. What is ESG about?
Well, I think what I meant by that was it's both we ask for financial performance, right, out of our ESG investments. We often say that ESG investing is really a tool and a lens through which you can become a smarter investor. And it leads you, as we've been talking about in this session, mostly about value, outperformance, and returns. But ESG investing can also help you identify where risks are. And I think that's an important component of this. It's both a driver of risk mitigation and returns performance, while at the same time, after using what I call a basic ESG screen for good hygiene, it also leads you to places where you can deliver real impact. I think by asking yourself the question, what are good markers of environmental, social, and governance characteristics, then often it takes you much further down the path towards saying, with my capital, can I deliver real outcomes? Can I deliver measurable outcomes that I can then report on and feel good that my capital is doing something meaningful in the world? And that's what I think I was meaning by saying it's not only about the money, it's about your impact, it's about mitigating risk, and of course, it's about returns too, because we, of course, are in the world of financial return when we're talking about investments. So it's all of those things.
Yeah. Patricia, do you agree? ESG is not only about the money.
Definitely, definitely. I do believe that considering all the stakeholders does have an impact on valuation, especially when we take into account your present value, given all the future appreciation on that, and the intangible, which seems to be an intangible value that you're adding today to become more tangible in the future as well. But I do think that you mentioned, Rodrigo, and Marisa just enhanced it, how this is becoming important. I mean, we were just discussing at BTG the other day with our CEO how special the moment that we are actually is, where we can differentiate the strategy that we have as a financial institution moving forward, that will position the bank itself as an institution, a company that is actually engaged on delivering something back to society, on creating value to our stakeholders and considering all these aspects into our decision-making processes. So it's really about how you do things, what you do, and what you're looking into the future and actually creating throughout all your portfolio as an allocator. So when we talk about sustainable investing, which is the theme and the topic of our discussion, your money talks in the sense of, once I heard something that is really special for that, tell me what you're investing and I will tell you who you are. So what you do with your money, where you put it, how you invest it, is actually something that is much more than returns. I think we should never forget about solid returns, even not only because that's a driver of decision in the short term, but because in the long term, that's going to make the things sustainable. What creates tangible value is going to be a winner strategy. But as well, you should consider the impact you're generating on not only mitigating risks, but also having objectives alongside that strong return. So I think I should only sign below everything what Marisa just said. I fully agree with that, Rodrigo.
That's great. Well, we're almost at the end of our time. We have 3 minutes, so I would ask you to uh, make your final considerations in 1.5 minutes. Please, Patricia.
Great. Thanks. Thank you to this exam team for the invitation. Thank you, Rodrigo, for moderating this precious conversation as driver. Marisa, it has been a really pleasure to speak to you about it and to see the alignment we have on the topic. And final message would be that, looking at sustainable and impact investing as an opportunity, as something that is growing and that should be gaining traction moving forward is already obvious. But I do invite everyone to get to know the actual products that we have available. At BTG, we have a real effort. We are creating strategies related to, equity and debt and, alternatives. So I do invite everyone to actually know those opportunities and know what you can do with your own money in that sense. So you get solid returns and impact our sustainability at the same time.
Great, thank you. Marisa, please.
And I would also have to say what's gratifying is whether we think on a global perspective, a regional perspective, we are so very much aligned. And I think that that speaks to something very important, which is this ESG investing allows you to express the things that you care about. What do you stand for? What are your values? You can express that through your investing habits, generate a real difference in the world by helping to solve some of these systemic challenges. And in so doing, you can make a healthy return. And I think that that's what the both of us want to stress, is that this is not at a sacrifice of return, and in fact, quite the opposite. We think it actually gives you a better risk adjusted return, whether it's because you're avoiding pitfalls and things that are no longer tolerable for society at large, but it also leads you into some places that are pretty exciting. And I think Brazil has a real role to play in this. There are so many unique aspects to the Brazilian economy, but also Brazil's challenges, which speak to the ability, if we can mobilize private capital, we can really make a difference and change people's lives, change the face of the economy of Brazil, but also make money for the investors that are mission driven and mission aligned, which is wonderful, because I think together, if we think about the UN Sustainable Development Goals and SDG 17, which is all about partnerships, I think a collaborative effort is what'll achieve the great outcomes in the future as well.
Okay, thank you very much. Unfortunately, we're out of time, but it was really a privilege to moderate this conversation here. I've learned a lot with you. Bom, chegamos ao fim do nosso. Obrigado, valeu, Patrícia. Chegamos ao fim do do nosso painel. Queria agradecer a presença de todos, de todas, e voltamos com a Jéssica no estúdio.